Friday. It's good to see you.
Good morning, Carl. Thank you. It's nice to be here.
I want to talk a bit about sort of Robinhood, reputational risk, and all of that. But it sounds like the most important thing you're trying to get across is the urgency of the SEC to start to draw some guidelines. Otherwise, we're going to continue to see interest and money continue to flow in and heat up the space.
So I think that, that's right, Carl, but I think it goes back to the first steps, and democratization of trading and investing is extremely important, right? It started a movement a long time ago when E-Trade dropped the first trade, over the internet. But you flash forward to today, and with the accelerated adoption of technology as a result of the pandemic, as well as the willingness and necessity really for folks to interact with their finances remotely. And you begin to see more and more, the leveling of the playing field that's being pulled forward for retail investors. So you take that and couple it with, couple that availability, the access, the execution speeds, their willingness and ability to participate in these markets, and you couple that with social media, and you start to see, how we got to where we are. I mean, it's truly uncharted territory, and I believe we're, in unprecedented situations. So when I talk about, the SEC coming in, I say, okay, we definitely need more regulation and thoughtfulness around what's happened. But I do believe that it's great to see the playing field having been leveled to the point where the retail investor really matters and has a right and has the ability to participate in this marketplace. But when I talk about the SEC and rules and regulations coming on board, they can't just be focused on the retail investor and stopping trading or putting them in the penalty box. It has to be a system-wide situation, right? You have to find or make a solution for the entire thing.
Right. Now that makes sense. I mean, give our viewers a sense of what's a good idea of a sample regulation that you think might make sense, that has sort of universal acceptance among lawmakers and regulators. What could we be looking at, say, 6 months or a year from now?
Well, I think one of the most important things is really to take a step back and look at the entirety of the situation. Social media and its use and adoption, when you couple that with retail investing or trading, I think that's here to stay. And I actually think it's important because I think that social media is a phenomenal way to get education out, teach investors about the market, share ideas, share thoughts about companies, right? That information sharing piece. So I don't think it's going anywhere quickly. But I do think piloting, right, some rules and regulations around the exact type of trading and situations we're seeing today on both sides, that's what the SEC really needs to focus on. Take a look at it, run a few pilots, take a few names, right, see how we can get to a point that you're not just moving the goalposts on the retail investor. That's what always have been done in the past, and that just has to stop.
Shepard Smith here. Thanks for watching CNBC on YouTube.